the company whose annual report we're going to analyze is CIBC, which is one of the big 5 banks in Canada. Let's begin with talking about price per ratio. Price per ratio is a common practice for investors to use the price to earnings ratio, and it is used to determine if a company's stock price is over or undervalued. Companies with a high price per ratio are typically growth stocks. The price per ratio measures the market price of a company's stock relative to its corporate earnings, which can then be compared with other companies. The price per ratio of CIBC in 2016 was 8.56, which was calculated by using the formula market value per share divided by earnings per share. Let's move on to dividend yield. Dividend yield is a dividend expressed as a percentage of a current share price. Dividend yield is a way to measure how much cash flow you are getting for each dollar invested in an equity position. Alright, let's move on to dividend yield. Dividend yield is a dividend expressed as a percentage of a current share price. Dividend yield is a way to measure how much cash flow you're getting for each dollar invested in an equity position. In other words, it measures how much cash or profit you are getting from dividends. In the absence of any capital gain, the dividend yield is effectively the return on investment for a stock. The formula to calculate this is annual dividends per share divided by price per share. What this means is that CIBC got 4.7% cash flow for each dollar that was invested in their equity in 2016. Return on equity. Return on equity measures a corporation's profitability by revealing how much profit a company generates with the money shareholders have invested. Return on equity is sometimes called return on net worth. The formula to calculate this is net income divided by average shareholders' equity. The return on equity for CIBC in 2016 was 19.9%, which means that they generated 19.9% profitability with each dollar of their shareholders' equity.
Calculate earnings per share by taking profit, subtracting preferred dividends, and dividing it by weighted average number of common shares. Earnings per share is used as an indicator for a company's profitability. EPS is used because it is very important in determining a share's price. CIBC's EPS for 2016 was $10.22. CIBC compared to other banks has a high EPS, which for investors shows that they could consider investing into CIBC if they are looking to invest into a bank, because they can expect higher earnings per share than other banks like BMO. You can calculate payout ratio by taking dividends and dividing it by net income. The payout ratio is used as an indicator of how much money a corporation is returning to shareholders. The payout ratio is used because it can determine the sustainability of a corporation's dividend payments. CIBC's payout ratio for 2016 was 46.4%. What this means for CIBC is that almost 50% of their net income is paid to their shareholders. You can calculate book value per share by taking total shareholder equity, subtracting preferred equity, and dividing it by total outstanding shares. The book value per share is a measure used by owners of common shares in a corporation to determine the level of safety with each individual share. Book value per share is used because if a corporation decides to dissolve, the book value per share indicates the dollar value remaining for common shareholders after all assets are liquidated and all debts are paid off. CIBC's book value per share in 2016 was $20.30. For CIBC and their common shareholders, this means that each shareholder could receive $20.30 for each common share they own.